Hello, everyone. Today is Thursday, November 30th, 2023. How'd that happen? It's like I did the service tonight. It's like tomorrow, it's service is for Friday, the 31st. It's like, wait a minute, hang on a second. All right. I want to welcome everybody to the weekend charts, obviously. There's the thank you screen. Obviously, I want to thank you for taking time out of your busy schedule. Easy for me to say to be here. If you're on YouTube, I'd like to welcome you aboard. Thank you so much. All right, what we talk about? Well, obviously, current market conditions. I have a ton of stuff to say about that. Your questions on trading, feel free to start typing them in now. Your favorite picks, both stock and crypto, hold off on those until we get to live charts, just so I know which ones we covered, and also one at a time. Put in one ticker at a time. That way I know what I covered and what I didn't. Charts in the charts, though. What a concept. We got quite a few things we want to update. I want to do a TFM 10% update real quick. Talk a little bit about whipsaws because we just had one. And, as I was putting this together, I had a lot of crypto examples. And it really got me to thinking because I'm doing crypto in a very small way, but trading is trading. And there's a gentleman or two in the gym that I've met recently, and they're interested in trading. And I can tell it's kind of stressing them out because they're worried about putting up all this money and losing all this money and all this other stuff. And it's like, you can really get into crypto cheaply, and it's a crash course, so to speak, and it's kind of crazy in trading. And there's a lot of great things about it is from a trading standpoint, and I'm going to flesh a lot of that out and show you my open portfolio and what I'm trading. And I'm going to show you how I'm not really doing it in a huge way. If you want to attend these live, and you're watching a recording of this, obviously, davelandry.com/webinar. My YouTube is at Dave Landry, and some other ways to find me on Twitter or X now. It's T following moron. This disclaimer screen, as you know, you lose money trading, or is off to summing up. All predictions are about the future, and a lot of stuff can happen between now and then. That's from my buddy Greg Morris. I guess I could say shit. I'm not really worried about monetization that bad. All right, to the live charts, real quick, or to the charts, I should say. Let's talk quickly about the methodology and action. And one thing that I was thinking about today, I woke up thinking about at least, is that as a trend follower, you spend a lot of time less wealthy. I don't remember where I got that from, but the term less wealthy, but I've been using it so much, I've just forgot. But anyway, my apologies. When I reread the book that I found it in or whatever, I'll make sure I give them credit. But I was looking at this one earlier, and let me just do a little quick walkthrough. But about 80% of the time, you're actually losing money on the position or giving up open profits. So all we're doing in this particular case, we were looking for the lows to be greater than moving average, meaning that you have Landry lights. And I like to use a 30-day EMA at this point in time. And I find it works really well. It works exceptionally well in crypto too. And that's the other point I want to make when I get to crypto, is that markets are markets. But you can see it pull back to the moving average. I don't always wait for it to get all the way back to the moving average, but the Landry light pullbacks, which used to be called Kiss Ma Goodbye, Kiss MA being moving average, with that pattern we were using the 20 EMA. But anyway, in case you read layman's and you can't find Landry light pullbacks in there, they were called Kiss Ma Goodbye back then, but now we've changed the name to Landry light pullback. So here were the parameters. On this particular day, we had two setups, one in KNF and one in LFMD, and we're actually still long these, and that's a testament for patience and spending a lot of time less wealthy, being willing to spend a lot of time less wealthy. So the entry was here, and you could see that we were initially underwater for a few days. It took off. We were feeling pretty good, came all the way back in, and then we were underwater for about a month, certainly not making any new equity highs. Out of, let's see, 1, 2, 3, 4, out of 5 months, almost 5 months, about nearly almost, I'd say about 90% of the time, you were giving up open profits or you had outright losses on the position. Yet the position has done really well, and I made a new equity high today. We'll take a look at the portfolio in 1 second. So the stop was way down here. This might be exaggerated. I need to check my scaling on that, but I'll show you. We had the parameters earlier. It was about a point or so, which this particular stock called for. The HV was pretty high on it. Now, one thing that I've talked about quite a bit lately is that the market topped and began to tank. And I know a lot of people were thinking, well, it looks like the market is done. And they were right for a while. And we even had a sell signal in one of my major systems that I follow, the TFM 10% system, which we'll look at in just 1 second. But my belief is to plan the trade and trade a plan. And in doing so, you put a stop in place. And if you get stopped out, so be it. Now, notice we went sideways, like I said, for a long, long time. That's 1 month there. And then you have another month before you made a new equity high. And then finally, it did hit that IPT, initial profit target. And then we trail a stop higher on the remainder. Now, the trailing stop, we let it gradually open up over time. Today, for instance, I think it moved like 17 cents in our favor, and it made a new equity high. So we're going to bump up our stop. But I only moved the stop up 15 cents. And I'll show you the portfolio from today's service in 1 second. But you can see, once again, we had dead money. Now, dead money is money that has little or no chance of ever being worth anything more substantially. But the problem is you don't know that it's dead money. And most people won't sit around in a trade and be underwater, at least not for very long. They'll give up on it and go chase rabbits or rainbows or whatever else somewhere else. Now, truth be told, I do get a little impatient in a lot of my other trading, but if I recommend a stock for the service, I just follow my original plan, and that's what I would recommend you do. Now, you do too. Now, we do use a little discretion here and there. I use discretion on CEIX, and initially I looked like a genius, but then I got stopped out for a little bit more than I intended on losing, but that's okay. With discretion, meaning, like, for those that are new to the methodology, let's say your stop's at 50 and the market hits your stop, but then immediately reverses. Sometimes you can stay with that position, and your marginal risk only goes up a little bit, barring overnight gaps, of course, and you have the potential to possibly stay with a winner longer term, or it could turn into a winner. But there is a cost that comes with discretion. There's obviously a mental cost because you're making more decisions, and every decision you make has stress attached to it, as we talked about before, and also has emotions attached to it too. So here's the other one we're still long, was a first pullback in an IPO, one of my favorite patterns, by the way. Anyway, so there's the parameters down there. So getting back to the LFMD, the stop was way down there. So it was like 1.25 on that stop, which percentage-wise is kind of ridiculous. And it's out of the frame, but when I show the portfolio, I think, if memory serves, I think it was like a 29% stop. And people will say, Dave, I can't trade no 25% or 29% stop. And I'll say, well, then you don't get no Coke, because that's what the position calls for. Now, you scale down in your share size. So we were only buying 1,600 shares of a $4 stock. So if we take a look at that, let's see, it was 425, 4.25. I can't do that in my head. I'm not that good. 1,600 equals, so that's $6,800 is all that had to be put up for this trade, and that's a substantial amount. I get it. And this is based on a 100K account, so about 6.8% of your account. Now remember, we're going to stop out at a 2% loss, and hopefully that's all we ever get whacked for. Occasionally it's a little worse, but longer term, these winners like these two will help us pay for those losses. And all you need is 1 or 2 of these big trades a year to really make your year. But anyway, you adjust the share size down accordingly. And I've done presentations before where I show a higher price stock that might be less volatile, and you might end up with 50% of your account in it if you're following this methodology. And even though it rarely goes more than 1 point, something bad can happen. You can have an off-the-cuff remark from a CEO. A CEO today said "F you" to someone, which was quite funny. So anyway, it looks like it might actually help his business, but that's another story. But getting back to this particular position, the trigger was here, and you can see once again we have lots of dead money happening, weeks and weeks and weeks, or a couple of weeks at least of nothing good happening. And then the IPT was up here. And once again, if you had a crystal ball and you knew that the market was going to top on July 27th, it would not have paid you to get out of these two particular stocks. And I think those were only two longs that we had since the market topped. Now, obviously, we've come back, and we'll take a look at that obviously in a second. But anyway, that stock gets trailed higher, and you can notice that there was a lot of dead money in this. And it did come dangerously close to the stop. It didn't stop us out, though. Sometimes stocks take a while to consolidate before they make their next move higher. You've got a lot of jockeying for position with a lot of different people in there. People are buying stocks, selling stocks. Some people die, unfortunately. Some people get divorced, unfortunately. Some people come into a little bit of inheritance and they want to spend it in the stock market. So a lot of things happen while the market is just sort of churning along, like this stock has done quite a bit. But it's done nothing wrong. Every time it's sold off and gotten kind of close to the stop, luckily, unfortunately, somebody has come in and swooped it up, or buyers have come in more accurately. Demand was meeting supply in those situations. Anyway, so here's the portfolio, and it's off the screen here. I think this was 29% on KNF, and it's significantly, I'm sorry, 29% on LFMD and significantly less on KNF. Okay, the percent of the stop, well, you can just look at it here. 1.25 was a stop on a $4 stock, so that's 29%, and then a 6.7 stop on a $45 stock, so much less. Markets jump news. Market jumps on CEO's FU. Yeah, kind of interesting. Well, you know, he went on Joe Rogan and smoked a joint and drank some whiskey, and the stock had a little blip. Was Tesla, I think. It had a little blip, and then it went straight up. So even if you knew he was going to do that, the reaction was quite the opposite of what one would think would be normal. All right, let's do a quick performance-based update. The reason I use the word performance-based is if you boil down my technical analysis, and believe me, I keep things really, really simple. Uptrends, downtrends, and sideways. In fact, I keep the instructions printed right here, just in case I forget. I don't know if it's going to work in the camera. Let's see if it'll come out. My arrows need to be bigger. I need to get that fixed one day. But the reason that the arrows are small is because I didn't really want huge arrows at the time, because it was my first tattoo, maybe only, hopefully only. And they explained to me that if they made it as small as I wanted just like a little thing, whatever, that all the letters would go like a little blob. And I've seen people since with these beautiful music notes and stuff, and then you see them like 6 months later and it looks like a blob. All right, so performance-based, getting back to that before my ADD kicks in any worse, is we're looking for strong stocks, and we're looking for a place to get in those strong stocks, or strong crypto, and look for a place to get in strong crypto. And sometimes you can just buy the strongest pairs in crypto, and I'm going to show you a lot of that in just 1 second. It's starting to settle down again, so you can kind of go back to the core methodology, and I'll walk you through that too. But when you boil it all down, there's no mumbo jumbo in my technical analysis. I'm using indicators as illustrators to show me what's happening in the charts, because indicators don't indicate anything. If they did, then whoever had that indicator would own the world. They certainly would not be selling it to you. So the net price change, or how far it is off of recent highs, just eyeballing the chart, a moving average, Landry light, simple things like that, let you know if the stock's doing well or not. I think my oldest daughter would probably be a good trader, because she started a new job about a year ago, and as she was coming into the job, before she actually officially started, they said, look, since you're in between jobs, do you want to join our fantasy football team? It'd be a good little team building thing. You'll get to meet some other members or whatever the teams. And she's like, well, of course, she's a team player. And her first game, she got angry because she couldn't pull out players that were performing poorly and put better players in. And that tells me right there she would be a good fantasy football player or whatever, or actually a good stock trader. So that's what we're doing, as we're getting rid of the weak things and we're hanging on to the strong things. So there's the 52-week high from a while back. And Jeff, who's here tonight, pointed out to me, I've noticed, and all the research was based on what happens after you have a 10% drop in the market. And not all the time, there's a little whipsaw here and there. We actually had a couple of whipsaw signals, but that's okay. As Greg Morris says, and I often quote him every week, whipsaws are frustrating, bad markets are devastating. You can survive frustration. But anyway, Jeff pointed out that once you get more than 5% away, bad things tend to happen. So that inspired me to put these zones in here. So the green zone is you're within 5% of the 50-week closing high. And I suppose I could have made it the 52-week closing high, because I think the only reason I used the 50-week closing high was that I used the 50-week moving average, just to keep it simple. So as Jeff pointed out, when you get 5% or more away from that 50-week closing high, that's when you need to start being cautious. I didn't do the entire testing, but I did some eyeballing, and Jeff's right, it does get you out of trouble a lot. The only problem is you're going to have more and more whipsaw. So whenever you loosen a parameter like that, you're going to end up with more and more whipsaw. Now, bad things tend to happen once you get 10% or more. 10% or more is a good round number for indices. I don't use this in other markets. I would imagine if you were, you would have to have a much, much looser parameter. And it might be so far away, like if you tried it in Bitcoin or something like that, it probably wouldn't work. But you might want to experiment with maybe like 20% or something like that and see what happens. And we made 50-week closing highs just recently, which is kind of cool. I know you're going to party with me. And then we're just off of them. In fact, we tagged them today, but we didn't close there. So this little green line here won't start going up until you start making 50-week highs again. There I am saying 52-week highs. So you can see right here, from here to here, it begins climbing, the green line, okay? That's 100%. If you look at the parameters over here, that's 100% of the percent of close. By the way, this plugin is free in stock charts. If you do have stock charts ACP, like this video and then click right there for the plugin and you'll get it free. I think it's the number 2 most popular plugin on stock charts, which is kind of exciting. There's been thousands of downloads. So here's the rules in case you are not familiar with my methodology. When you close 10% or more away from the 50-week closing high and close below the 50-week simple moving average, I use the simple moving average for this system. Lag is not always a bad thing. There's a lot of people that are always trying to get the lag out of stuff, and that's been going on since the creation of time. But I wouldn't worry about lag so much. Sometimes you want a little lag built into a system so you're not chasing your own tail, and that's why I figured a 50-week moving average would be fine for this. If you want to experiment with a 50-week exponential moving average, knock yourself out. It might actually work better. I just wanted something that was going to get you out quickly enough, but then not give you too much whipsaw. And my whipsaw filter is the buy side, where you have to have a little Landry light. In fact, I'll show you that right now. So recently we had a sell signal, and somebody pointed out on Twitter or X that there's a 60% chance, and this was going back about 20 or 30 years, I believe, maybe 30 years, that the market will drop another 10%. And I thought that was an interesting stat. I went all the way back to the early 1900s, and it looks like his research holds water, because I think it was like 57 to 59% of the time But obviously, the fact that the last two signals we had, the market did not implode another 10%, that doesn't mean that our last, or signal before last, I should say, this signal right here, the market didn't go down 10%, but on the re-trigger of it, it did, okay? But obviously on this one, the market was straight back up, which is fine with me, okay? So now it's like, all right, well, markets approve it again. It's much easier to trade the long side than the short side, as you probably know. So the buy signals are a little bit more stringent. You have to be within 10% of the 50-week closing high, and you need 2 bars of upside Landry light. That just means that you have 2 lows, 1, 2, and it's a market on close system. And I think I resolved, we were talking about calendar versus rolling. All the research was done on a calendar basis, so we're going to use a calendar basis for all our signals. That doesn't mean that I won't point out a signal intra-week should it occur. And it doesn't mean that you should completely ignore those signals. You might want to get ready at least. But we're using a calendar week, meaning that Fridays would be the day that you would want to get out if you had a sell signal. Somebody asked last week, we had a sell signal. If we have a sell signal, do you wait? Could you wait another week or two to see if the market actually does go down? Well, in this particular case, that would have been, you would have looked like a genius, right? Because you get a sell signal next week, straight back up. However, the problem with that is, I only have to go back to 1987 to show you, and there's probably some other ugly times too, maybe in the 1920s, maybe 1929. But in 1987, you got that sell signal on the Friday, and then Monday was the crash. So, and by the way, this stupid little system, just a silly little system. I can't believe it works. It's just so goofy, It's so simple. But this silly little system would have kept you out of every bear market in history. Now, there's going to be some whipsaw here and there, but I think that's a pretty cool thing. And if you don't walk away with anything, or you don't care about the system, just know that once you hit 5% or 10% below that 50-week closing high, your performance-based metric is not performing too well. You might want to think about getting out of the way. Now, this is the buy signal I took at the NASDAQ. I knew we were coming up on a buy signal, and I did some quick research, and it looked like the system worked pretty good in the NASDAQ too, or at least the Qs, I should say. NASDAQ bases the Qs, and what's this, the NASDAQ 100. So there was my buy signal at 319.49, and I don't follow systems mechanically. I am a discretionary trader, and even within that discretionary trading, I use some discretion like I did with CEIX, even though that did not work. But you got to take a shot at it, right? But even though I'm a discretionary trader, I thought it'd be kind of fun to take this mechanical system and see how long it can hang on. And it's kind of killing me because the drawdowns are pretty steep in this. And it's, when you're testing a system, as I would recommend you do bar by bar, you click, going through the bars of the charts. You're like, oh, okay, I got to buy here. Just, you go through all the data, just doing this. You're not thinking like, there's 1,000, there's 1,000, there's 1,000, there's 2,000, there's 3,000, there's 4,000. But once you actually trade that system, you're like, holy cow, this is actually real money. I only did 100 shares, like 100 shares, what, no big deal, right? But once it got into the 390s, it began to get substantial. So you can see at 388.83 where we're closed today, minus 319.49 was my entry. That's 69 points, 69.34 points on 100 shares. So that's $6,934. Now that's nothing to sneeze at. It's not a crazy amount of money, but it's substantial, right? And I don't want to give up all of that. Unfortunately, the sell is right here at 338. So that would be a fairly significant drop. Ended up with about $1,800 round numbers, which would be like a $5,000 drawdown. So that's one thing about systems they don't tell you in the brochure is what it's going to be like to actually trade them. By the way, this system is pretty cool in that it's been very robust in the walk forward phase, okay? So when you design a system, you just have all the background data or the historical data, and then you have no idea how it's going to perform in the future. And I told a systems designer once that your biggest drawdown is always in front of you. And he got mad at me. And I have a feeling that if he didn't believe that, he's probably gotten himself in trouble. That's another story altogether. But this thing has held up fairly well. It's going to have an occasional whipsaw. But for the most part, I mean, you got whipsawed back here. There was a signal that, no, I'm sorry, it was in the piece. But same kind of chart, you can see that getting out of the market here, okay, and it drops all the way to down here, and I don't know what percentage that was, but it's substantial, like a 30% drop or 20% drop, whatever it was, from that exit point. Just one or two of those a year keeping you out of trouble makes it all worthwhile. And as I often preach, market timing is less about beating the market and more about not letting the market beat you. Every asset class will lose at least half of its value at some point in your lifetime. And I've seen a lot of assets lose at least half of their value in my lifetime. Stocks 2 or 3 times, gold, plenty markets have imploded. So there are no, I wrote an article a while back called Cash is Not Trash, and there are no good longer term investments. Now, just real quick, I've been getting a lot of questions on the VIX, or a few questions, I should say, spread over time. One recently was, hey, can we use the TFM 10% system in the VIX? And my answer to that was no, because the TFM 10% system is a trend following system, and the VIX is a market that's based on volatility. And volatility tends to be more of a reversion to the mean type of market. I actually read about the VIX system before I met Larry Connors. He had a VIX system that was used a fixed number. I think it was 15. You wanted to buy a market when it was above 15, and sell a market when it was below. And that stopped working because the parameters changed in the market. So as soon as it's like Linda Raschke once said, as soon as you figure out the key to the markets, they change the locks. So when I began working with Larry, he explained to me how the VIX works and how it reverts back to the mean. And I was doing some programming and research for him. So I started throwing moving averages and messing around with all the mean reversion stuff I could find. And I boiled all that research down using more complex indicators, and then I boiled it all down to a 10-day simple moving average. And when you get 10% or more away from that moving average, the market tends to reverse, okay? So if you're way down here, the market becomes complacent. You tend to have additional downside. If you're way up here, the market's in a bit of a panic mode, then the market tends to rally afterwards. So it's a little counterintuitive. And I found that 10% is a good round number. Also, the VIX only matters when it matters. And a lot of times it'll just kind of bump along, and we might be entering one of those phases. Even though it's really low on a point basis, we're right near that moving average, or just barely below it, so we're not really stretched. And the other thing too is when you get stretched away, that's when you look for a reversal. Don't actually be a hero. Wait for the market or the VIX, whatever you're trading, or both, to begin to reverse. And one more thing, I looked at one of my older systems a while back, and I think it was around the pandemic time, and it absolutely printed money. And then I wouldn't say it blew up, but it got hit pretty hard. That's one of the problems with a pure short-term system. So with this VIX stuff, I no longer take short-term position trades. If I'm trading a stock, obviously I'm getting in for what I hope is a swing move up to my initial profit target, and then I trail that stop higher to hopefully stick with it for a long time. But I don't go in and say I'm going to take a pure swing trade. I think pure swing trading, has a problem, or I know it has a problem, because a market can only move so far over a small period of time, but it could certainly implode and hurt you really badly. So If you're trading a pure short-term system where you're out within a few days or within some sort of rule happens or whatever within a few days, then it'll probably work fantastic, but be prepared to get your ass handed to you every now and then. So I'd much rather, and you get your ass handed to you in trend following too. That's why I developed this hybrid system, especially when it comes to the money management. And that's why it's kind of aggravating my clients a little bit, because I know they're chomping at the bit to do something, but there's nothing to be done. And sometimes people say I look for too much perfection in a chart, but I would much rather go into a trade thinking that I have this F yeah trade, and if it fails miserably, I'll shrug my shoulders. I mean, it might drop an F-bomb, but I could say, you know what, this looked pretty good. I think it's worth a shot. If I saw this same stock again tomorrow, I would definitely take it. And that's the way you need to feel about trades, as opposed to stopping out and going, I knew I shouldn't have taken that trade. There's a little quick trading psychology there. But the bottom line is you make decisions and you live with them. So you can see the VIX is now right around that 10-day simple, and we're only a couple of percent away from it right now. So I don't think the VIX is telling us anything at this juncture. We are still overbought, but I think we're beginning to walk off that overbought condition. I'd actually like to see a little bit of correction here, a little shakeout move. All right, let's jump into crypto, and let's talk about how you can trade crypto with a small account. And the beauty of crypto is I have no freaking idea what these things do. I understand Bitcoin and I understand Ethereum a little bit, right? But all this other stuff, I have no idea. I know there's governance coins and tokens and all this other good stuff. So that's the great thing about it, is I don't have to worry about all that stuff. Is it a good company? Is it a bad company? What are the company's politics? Blah, blah, blah. What are earnings, and all this other good stuff. What's the PE? What's a PE? I don't use PEs. Actually, I use a numerator. I don't use a denominator. That's price. Anyway, it's my open portfolio. I did right before I went live. I was out of money in this one account and actually flipped this one out, and I might have chased a rabbit. We'll take a look at that in 1 second when we get to the live charts. But anyway, the blue things in blue are things that I'm watching. Things in green are things that have hit the initial profit target, and other colors like this one down here. This is one I have a stop in, and then these cyan ones are just markets that I like to watch. So that's my color scheme, at least for now. Last week, I talked about the importance of making sure you put that limit order in. This is a 5-minute chart, and this was my initial profit target. You can see it came within like a gnat's eyelash of that initial profit target, and then it imploded. Whether or not you could have gotten the shares off at that price, I don't know, but it does kind of give you an extreme example of why you need that resting order in place. And that's the beauty of these crazy SHYT coins, shitcoins, is they just go crazy sometimes. And I try not to do it on purpose because I don't want to trade with some sort of extraneous influence in mind. But one of my favorite games to do is before I go to the gym, I look really hard at crypto. And if there's something that really, really, really looks good, I make sure I get long before I go to the gym and come back about an hour later. And a lot of times, because I have that limit order in place to flip out half the shares, and I'm just using right now 20% profit target across the board. I'm not sitting around and doing all the calculations and everything. When crypto is moving, I think as the crypto market matures, or maybe you're trading a bigger pair, then maybe that becomes more and more important to get the volatility right. Just like I showed you earlier, the volatility on one stock, we had a 15 or 18% stop. On the other one, it was like a 29% stop. So anyway, I haven't adjusted that volatility. So here's the trades down here. In this case, look, only 1,000. I'm gonna show you some much smaller trades, okay? And I'm not ashamed of that. I think crypto is crazy. I think it is bullshit. I don't care. And you just can't care about markets if you're going to be a trader. And I think that's the beauty of crypto is it's all bullshit, and just have a chair ready for when the music stops. Don't get too full of yourself. and trade along. So this was a market that was just making new highs at this particular point in time. This was a newer one, I believe. And we'll get to the live charts in 1 second. So if anything's masked, we'll see it. And when I logged in a little while ago, it was worth $8.95. That was the remainder of my position. So, oh, actually, I got in right here at 49. Nope, I'm sorry, right here. Yeah, right here, about 41. Let's see. Do I have a fill number? Yeah, 41, 44 on November 9th, 2023. So I invested a whopping $1,000. I don't intend to lose $1,000. Obviously, I'll take myself out. The great thing about trading RS, when relative strength, when the market is moving, and I'll show you exactly how I do it in just a couple of minutes, is that if something is not working and something else is, then it's like playing that fantasy football, but you could pull that player in the middle of the game, put a new one in. And that's a lot of fun. I know you want to party with me. So at the IPT, I sold half, okay? And 20%, right? So $1,000, 20%, that's $200. So roughly $100 in profit comes off. And like I said last week, it goes a little bit against everything I say, but just for shits and giggles on these little crypto trades, especially if they're a big winner on the way out, I'll take $25, just $25 per trade, and throw it into Bitcoin. And that way I'm sort of mining, so to speak, the shit coins, or using these shit coins to mine for Bitcoins. And that, if you go in and watch last week's weekly chart, that'll make a lot more sense. Just go to my YouTube channel for that. But anyway, so when I sold this, took off half, $5.95 at 20%. And then, again, the mark to market was $8.95. So right now, knock on wood, that's $490 of profit or 49% return. And that's the kind of crazy moves that are possible. So here's the MPL trade. And by the way, was that AXL? Was that last one? AXL? Yes. So this is the only one that's left from last week, or that I showed last week, I should say, that's still open. Let's see. This one should be open too. No, because this show was done after, I believe. It's been a few weeks since I've done a show. So MPL was bought at $12.56. And look at this, I put a whopping $508 in it. And I don't know if this is a smaller account or I was out of money and just had $508 left. It looks like that's what it was, just $508 left. And then I flipped out half of that at a 20% profit at $14.90. And there's a huge temptation. And I wake up in the middle of the night thinking, Dave, why don't you just step on the gas? It's like, let's just have some fun with this and see where it goes. And let's see if I could parlay small accounts, just playing the RS game and just doing simple things like pullbacks and Landry like pullbacks. So in this particular case, you can see you had a bit of a pullback here. And as it began to rally out of the pullback, I got long. And when I did a mark to market a minute ago, it was $444. So a whopping $508 was invested. Half the profits were taken off. So $299 went back in my account, plus the open profit. So that's a $235 return on $508, which is 46%. Here's another one, AOIZ. These are all from the open portfolio. So you can see down here, this was $929. That was probably one that I put 1,000 in, and then because this one began moving and this one was at a loss, I probably took a $70 loss if I had to guess on that position, and then put it in this position. So $929, $545 comes off at the IPT, which is here. And let's double check that. Yeah, the entry is here, IPT is here. Forget about this arrow there. And that's $635 again, mark to market. So we add all that up, $251, 27% gain. Now I do have losses in these things, but I keep them to a minimum. Doesn't mean I'm not gonna get whacked every now and then for a lot more than I intend, but I try to keep the losses in check. And as long as the markets are moving, I'm able to go in and use a fairly tight stop and I'm still using, again, that initial profit target of 20%. So here's another one, $1,000 going into the trade at 126.91. So you can see this thing was going straight up. I just bought as it was going straight up. You can't always do that. Unless you have a 1999 in stocks. I don't know if anybody here remembers that. Oh yeah, we got a few people here older than me. Thank goodness. So I don't feel so old. Yeah, a few of you here have been around for a while. Glad to see you. But anyway, sometimes in a market, when a market's just going crazy, you can just buy them as they're going up. Now, this little orange line here, this is actually my stop in this particular case because, and I separated it away, it's actually a little bit higher up. It's right where my entry is. So remember when you enter, and it's actually, this was bought on a pullback, so I might be wrong on that one. So this is a pullback. So this thing pulled back, was off in the races, it pulled back. I got it, I think, right here. But you get the idea. We're trading pullbacks or relative strength, and we'll get the live charts. I'll flesh that out a little bit better. But you can see that we did hit that initial profit target, and now the stop is at break even. So barring overnight gaps, yeah, here's my entry on this one. I'm sorry. So this was a pullback. Barring overnight gaps, and this is not a very deep pullback. Usually I like a deeper pullback, but when a market like this is moving, it's okay to trade a little shallower pullbacks. Everybody thinks I only trade deep pullbacks because we haven't had really fantastic, amazingly fantastic ideal conditions in a long time in stocks. So I'm a little bit more selective. Now, you don't want to get sloppy, but when everything's going straight up, you can't be as much a perfectionist. Just don't throw caution to the wind. Just don't get sloppy. So mark to market of 615, we had $1,000. We took off 598. Again, that 20% IPT. And we have 615 open, so $213 profit and a 21% gain. Now, here's the one that was bought fairly early, and we'll take a look at the live portfolio so I can show you all this stuff. But you can see in this particular case, this was done in an account where I had very little money. It's an account I was consolidating all my crypto accounts because I had like a half a dozen of them. And I left a little money in here for S&Gs, like $800 or something. And so in some of these positions, I'm just putting in like $200. So look right here, only $200 was invested. So, and this should be a market order. I'm not sure why. I must have fat fingered something here. But I did buy this market as it was going straight up. And I just did a look. I just looked at the portfolio. It's $326. The position is worth $326. So 319, we took off 197. So correction. So this was 319 because this is two trades to get in. So 319 invested. We took off 197 at the IPT. And we have 326 open. So that's a 64% gain. I know it's only $200. I know it's fuzzy math. But you should be getting the idea now. Sometimes you can just buy these things as they're going up. Now I have an open order in GMT right now at 0.28. And you can see it's almost a Landry Light pullback. It's a fairly deep pullback. It's a good looking stock. It was, or crypto, whatever these things are. Is it a token or is it a coin? It was moving higher and then it began to accelerate higher. It has a nice little pullback. And if it takes out 28, I'm going to get long this one. So that's just using the core methodology. Now, let's jump into the live charts. Any questions on the crypto? And again, hopefully it'll make a little more sense on the live charts. So let me just shift this over. It's not picking it up for some reason. Okay, let's share. Here we go. Okay, so the RS game, and I forget what time they swap over. It kind of mucks up. The webinar coincides with the rollover in these things, so they're not quite as impressive. But you go through these. Here's that AOIZ. So you can see, look, I bought this at 11 cents, okay? Or is that 0.11 cent? It's not much, right? That's 0.11, or is that 11? That's 11 cents. So I bought that 11 cents. I don't know how these things work. I don't know. Just buy them, right? They're going up. Even though it was at nosebleed levels and kind of scary, but a lot of other ones were going straight up too. And I decided to go ahead and jump in. And here's my IPT. Now you can see if you're marketed to market, it does get pretty ugly, okay? And I'm hoping, I know you use the word hope, but I'm hoping to ride out a few corrections in here before stopping out. And then if you can ride out enough corrections, sometimes you can ride out a position longer term. One thing I was thinking about before we went live is when you get into these crazy markets that are going straight up, if you could survive that first correction, I'm not saying throw caution to the wind, but if you already hit the profit targets, just be very liberal with that trailing stop and try to survive that first correction. Once you get through that first correction, sometimes the market can keep on keeping on. So like right here, this would have been the first correction. Let's say you'd have bought it way back here. That would have been your first correction. And if you can survive that, obviously it was off to the races. What did it do? It tripled from there, 300% move from there. So anyway, I just like to go through these before again, they just rolled over, so these numbers aren't quite as impressive. But if you just go through these, and I use candles just because they're easier to see. Now this is one I was long, okay, and I flipped this one out for something else, and that's where I got a little full of myself. And it looks like I should have just stayed with this one. You can see. But if you were trading like a core methodology, you can see we pull back to the moving average, and then so far it's off to the races. So definitely have some regrets on trying to get cute and flip that one out and buy an RS one earlier. All right, so let's take a look. Let me show you what I was looking at here. So here are some in blue that I've been watching. And you can see they're pulling back. And by the way, if you want me to take a look at a pair for you, just let me know in chat. And you people on YouTube, we'll check that out too. Let's see if we can fix this. Let's see if this is going to work. Okay, so here's the ones I'm watching. I'm trying to multi-process here, so bear with me 1 second. All right, no chat. Okay. All right, so here's my watch list. You can see this one here is pulled back after making this really, really great run. RNDR, you see it's close to breaking out in here. IMX. Now this one might be a little thin. When you see these long tails on the chart, so I'll just take that one off. Looks like it's kind of thin. Usually there's something wrong with the pair when you see a lot of tails like that. But you can obviously go in and check the volume when you look at it. This one too kind of might have that same issue. This one's kind of interesting. It's just consolidating at these high levels. I wouldn't buy a stock that looks like this, but right now when crypto is blowing and going, maybe this thing could break out and take off. And this Sol, or whatever they call it, Solana, this thing could really move. That was not as great as it looked. This one's okay. This is one that I played quite a bit and got shaken out of, but this thing moves, you can go straight up. This one's a bit on the extreme side, but you can see these long tails, it might be thin, so you'd have to be careful with that. Here's my open portfolio, everything in green, AOIZ. And that one, where do we buy that one? No, 11 cents again. MPL, you can see this was the IPT here, doing pretty good so far on that one. AXL, this was one that was bought, look at that, going straight up, okay? It was bought at 41 cents, and now this is almost a double. So that's obviously a good thing. TIA is another one that was going straight up, was bought here. And this thing began, this is the first retrace thing I was telling you about. And I know this is kind of crazy, but I hate to say playing with the market's money, but after this thing began to retrace, I said, okay. And I was watching this day here, and it was right around the lows. It stabbed a little lower, then it came back up, and I said, okay, that's it. Let me go and just put the stop in, and then if I get stopped out, I'll take the money and put it somewhere else because other stuff is working. And let's not start kissing each other just yet, but so far it's working once again. And if I get stopped out, I get stopped out. I'm still gonna have a pretty good profit. $5 versus minus 375 is still pretty good, right? GFI, we talked about this one a minute ago, just hit the IPT. Stalling out a little bit at the moment, but that's okay. We're in free rolling mode. It will continue to ride things out. Let's take a look at Bitcoin real quick. Bitcoin's kind of consolidating at these high levels. It's kind of, I'm not a big fan of triangles, but it's kind of making like a triangle up here. And the classical technical analysis people, I use a lot of classical technical analysis, usually like triangles. But they would tell you that this is supply, this is demand coming in, and it's going to hit the supply, and the chances are it might take out the supply and keep on keeping on. Let's take a look at Ethereum. Ethereum's kind of consolidating it here. Obviously, it took off for a while, and now it's just consolidating. Let's take a look at Bitcoin versus Ethereum, or Ethereum versus Bitcoin. And you can see Ethereum had a brief moment in the sun where it was outperforming Bitcoin, but now it's going back to underperforming Bitcoin. And you know, here's the thing. I'm just thinking about this is why I love teaching and presenting. I bet you $100 that you could take something like the TFM 10% system and put a ratio pair, one pair versus another, like Ethereum versus Bitcoin, and I bet it would work. Okay. I don't know. Let's see. Please, somebody remind me of that tomorrow, and I'll be happy to take a look at it. Somebody at Facebook tomorrow, remind me. All right. Any pairs you guys want to look at? NBC, I'm guessing you're talking about a stock. NBC. Yeah, okay. All right, let's shift gears and go to stocks real quick. And feel free to start firing away any stocks you guys want me to look at. Since we started the Facebook group, we don't have as many picks in the shows, which is fine. All right, let's throw a bow tie in for S&Gs. Okay. So let's start off with the piece. S&P 500 had an okay day today, sold off a little bit intraday, obviously, but then closed a little higher. When you become overbought, as I've said ad nauseum lately, it's hard to mount a new leg, like this is your first leg, right? It's hard to mount a new leg on top of an old leg. And by the time you get all the way back to the old highs, the market is so overbought, it's hard for it to continue to sustain itself. So that's one of the issues, but a market can walk off that overbought condition by going sideways. So we got about a week or so here at around 45.50. That would be a great thing. I'd almost like to see it have a bit of a knockout move, kind of fake everybody out, and then begin to take off. Good call on that one, John. I'm actually long that one. Just a very small position. Take a look at NASDAQ. NASDAQ has a little bit of a double top knockout move to it. Double top knockout is where you make a very micro double top, and then you have a TKO type of move. So it's a DTKO is what I call that. Ideally, I would have liked to see this bar much, much bigger to just scare the bejesus out of a lot of people. By the way, you can see these indices obviously are in uptrend proper order, meaning that 10 is greater than 20, 20 is greater than 30. 10 is simple, and 20 and 30 exponential. Those are my bow tie moving averages. I do like to use a 50 simple with these and then pay attention to the inflection of the moving averages coming in to the 50. And if it's very sharp, then we know we have something substantial that's happening. Let's take a look at Rusty. Rusty's kind of, same as it ever was. Technically, it's bow tied higher. I just can't get too excited about it. It has mountains and mountains and mountains and mountains of overhead supply to get through. It's just wide and loose and all over the place. For me to get excited about Rusty, it would have to get out of the range. I've got to watch myself because I'm kind of bearish on the Rusty still, even though it's improving. but I have to watch myself because I find myself really bullish on SRTY on an intraday basis, and I got to be careful not to trade it too much and only trade it when it looks like it's moving. When it moves, it can really move. By the way, I don't want to get you caught up in day trading, but let's see what it did. It didn't do much today, but it bounced a little bit today. Gold, the commodities been doing pretty good in here. A little bit of a pullback today, but so far so good. It's right at these multi-year highs. Another case of overbought into old highs. So I'd like to see this thing maybe correct and then take off again. Would probably be ideal. Or maybe even better, bust out the brand new highs and then pull back. Gold is probably going higher in part. I mean, I know the world's going crazy, so you could point to that. But in part because the dollar, as you can see here, has bow tied lower, a little bit of a bounce today. But the dollar looks like it's done, at least for now. And what happens is when the dollar loses value, it takes more dollars to buy commodities. So commodities that are dollar denominated, like oil, right, go higher when the dollar goes lower. And I mean, I guess there's things to keep you up at night. If we get off the dollar they're talking about, we get off the petrodollar, then things get ugly. But let's not worry about that tonight. Energies have been all over the place. They look toppy, though. They still look toppy in here. Unfortunately, because of it's so choppy, I haven't been able to find any meaningful setups lately on the short side. Metals and mining, they're all over the place, but they've been improving as of late. I haven't found any stocks in gold just yet that I want to trade. But if gold hangs in there sooner or later, I'm sure we will. Metals and mining is pushed higher in part, obviously, by the dollar. The banks have been doing really good. I know banks, but what is the regional thing? DPCT. I've been kind of noodling with that one a little bit. DPCT. What is that thing? What's the regional banks? There's a directional one of those regional bank things. Anyway, DPST. There it is. So this thing, it's been catching my eye lately. It's got good volume, and every now and then it can really move. I don't know if they have a short one too. Anyway, so banks have been doing pretty good, and here, financials banged out new multi-month highs. Now here's another example of overbought, right? We had this huge leg higher. We're bumping up against, or we're almost to these prior highs in here. It's just hard for an old leg again to mount right on top of a new leg. So I would expect some corrective action in here. And the other thing too, and this one you can't quantify, but I'm kind of shocked at how bullish everybody has become. And yeah, the market's going higher. I'm looking to get long, so I guess I'm bullish too. But these people are backing it with all this. They just feel like it must go higher. And it's like, I don't know, but I do like the fact that the news sucks and the market is going higher. The market's beginning to climb that wall of worry. I just finished up a 20-part series on Jesse Livermore, and one of the last things he said is that a market is a discounting mechanism. So brokers call up people and say, hey, you got to buy the stock to just had great earnings. Well, he shouldn't say that unless he knew that 6 months from now they're going to have great earnings, because that market is looking ahead. Just like in COVID, when it looked like we were all going to die, the market began to take off. So right now, market's climbing a world wall of worry. Drugs not looking too good, although they did push above their 50 and the moving averages are coming together. They still look toppy in here. You never seen one day at a time, but they're all over the place. There's nothing to do there. Biotech was kind of off to the races, stalled out a little bit. For now, I would say it's still in a downtrend. And even if it does begin to take off, it's got a lot of overhead supply. So all isn't great in the world. Defense is another one of those areas that is going to have a hard time sustaining this move higher, although it did make all-time highs today. So we could start seeing some setups here fairly soon. In general, though, you got to be careful not to connect the dots, wars with defense. Okay, I know it's hard not to do that, but just know that for now, defense is going higher, and we'll see the nature of the pullback and then decide whether or not we want to go after it. A lot of areas in here like M&C that rolled over, it's material construction, have just come back like crazy. Unfortunately, this is the reoccurring thing we need to pay attention to. And this is why I'm not crazy bullish right now, is because I think we're due for some short-term pain. But let's see what happens, okay? All right, a couple of more areas to look at. Software doing fantastic in here. So here's an area, break it out to all-time highs or right at all-time highs. I'd like to see it clear those all-time highs decisively before getting too excited. And by the way, everything I do is setup based, okay? So if I see a setup that I like, I'll take it, right? Especially if the sector confirms that the overall market's doing pretty good too. So let everything be setup driven, but you do have to do your sector analysis and market analysis too, like I'm doing now. Semiconductors begin to stall out of the prior highs. Another case of, hey, overbought into old highs. And I think the SMH looks similar. I am going to work for those people who are on the service. I am going to work in more and more of these ETFs. So one of you guys was asking me to move away from the MG groups, but the MG groups, I've been using them for years. I like them. I'm familiar with them, and they do a pretty good job of telling you what's going on. And I'm going to use both, but I will try to integrate more and more of those ETFs out there. Now, if something's set up like energies, I'll show you the ETF too. So the ETF only matters if something is actually set up. Okay. Qs have been on a tear. Obviously, they had a little bit of a double top knockout look to them. So that's actually looking pretty good. If we could stay above this prior peak for the most part, doing this corrective phase, that would be fantastic. What else? I think that's pretty much it. Uranium's been kind of crazy in here. It made all-time highs. It had a bit of a knockout move, and now it's trying to go back up again. So maybe we'll see some setups here, but the stocks are kind of messy with all this gyrations that we have. This is a uranium ETF, but if it can keep rallying, it's pretty close to all-time high, so that would certainly be a good thing. All right, individual stocks, MBC. Let's get a clean chart. Keep the picks coming, and I will get check YouTube. Let's see if we can do this. All right, MBC. Okay, volume's okay. HV's a little bit on the low side. Yeah, it just barely broke out past this prior peak in here. It's not jumping out at me. It would have to correct further. If it corrects further, then you're back below the prior peak. So I would pass on that one. Now, I would put it on my momentum list possibly to see if it sets up down the road. The IX groups seem to be better supported in the newer TC. Yeah, I looked at some of those, but they don't have a lot of things that I need, but I'll keep that in mind, John. I appreciate that. Yeah, it's like I stuck with the old TC until one day it just crapped out on me. And I call tech support, and they're like, yeah, we're not going to support that anymore. We're done. So they couldn't fix it. But Jeff, I would hold off on that MBC. Throw it in your momentum list. Let's see what happens. But for now, I think we could probably find something better. But there's not a whole lot out there at the moment. Now, the DAKT, I think I still have 100 shares of this. Oh, no. I'm thinking of something else. Never mind. I don't have any of this. Yeah, this looks pretty good, John. My only concern, if I had to pick it apart, is that the knockout came all the way back into the prior base. But for the most part, that's a pretty good looking stock. So I think it's okay. Maybe you want to get in, let's say, maybe like 11.25, and then stop out down here at maybe like 9.75 should you want to take it on. But that's a pretty good looking stock. Again, maybe I'm looking for too much perfection right now. I think if the market just starts going up and keeps on keeping on and persists higher, then sometimes the stocks I don't want to talk out of both sides of my mouth. You always want to pick the best setups, but you want to be super duper selective when the market is at some sort of crossroads like it is now, or due to correct or whatever. But yeah, for the most part, John, I mean, the only thing I can really pick apart on this is that we came back into the prior base, but that's pretty good looking stock. So I'll give you that's about. Here's the thing: there's not a whole lot of good looking setups out there, so I'll give you a high five with caveats. Let's take a look at USD is at the semiconductors, or USD, you want to look at the dollar? We just looked at the dollar. The dollar looks like it's rolled over. KLAC, let's clack. What is USD? USD, I never heard of it. Oh, it's semiconductor ETF. Yeah, it's just like the SMH. This one's thinner. I think the SMH would be a better proxy. Yeah, SMH is 8 million shares, and that other one was what, 100,000. But that other one kind of looks like the MG group stalling out right at the prior highs. But you can see we kind of got whacked here at the SMH, so that's a little bit of a concern. It's not the end of the world. The trend is still up. Don't get me wrong, but it's very dangerous to buy into at this juncture unless you had a really big knockout move. KLAC, clack. Yeah, clack looks pretty good. Clack cleared all this mess in here. It needs more pullback, okay? You don't want to pull back all the way to this base, but yeah, it needs more pullback. But that looks pretty good, Keith. All right, anything else? Let me check on, let me see what's happening in YouTube. Okay, we're good. All right, while we're in impasse, I want to thank all you guys and girls for attending tonight. I appreciate you taking time out of your busy schedule. Everybody have a great weekend. If you're in the Facebook group, then obviously I'll see you tomorrow. But in case I forget to tell you, have a good weekend. So again, I want to thank everybody for watching, and may the trend be with you. Thank you so much. You're welcome.